Welcome to the Grow Your Law Firm podcast, brought to you by Pilma. This podcast helps lead lawyers to more growth, profit, and freedom. Here is your legal marketing expert and host, Ken Hardison.
Well, hello, everyone. This is Ken Hardison, and welcome to another episode of Grow Your Law Firm. And today we have the honor and the privilege of having Boris Musheyev, which I screwed up the name again, but Boris, who is a CPA, and he's actually been doing my taxes and my tax work for the last several years. And he's actually going to be speaking at our summit coming up June the 27th through the 29th in fabulous New Orleans, where we're going to have big ideas and the big easy. So, Boris, tell us your story. Where are you from? How did you become a CPA, and what do you specialize in?
Yeah, hey man, thanks for the introduction, Ken. It's always a pleasure to be on your podcast. This is our few we've done together, the webinars, and I think we've always get great feedback. So I'm a CPA. I'm here based in New York. Originally, I am from Uzbekistan, right? So when people say, where is that? I'm like, well, you know Afghanistan? Well, it borderlines. So I came here when I was 13. I went through the school system, obviously in America, and I went to college. I went for accounting. I don't know why, but I can only understand numbers, nothing else, even though my father wanted me to be in medical field. So I had no idea what to do, but I realized that I can do numbers. So I went to accounting, and there I started pursuing a career in CPA, and I started working for, traditional tax accounting firms, pretty much churning out tax returns. And that's what I was doing for quite some time. And it's kind of meaningless work to me. And I was doing like almost 500 returns per tax season. That's like, 500 returns in 3.5 months, so to speak. So I knew something's got to, I got to do something differently. And then, so I kind of quit my job, took a leap of faith, and then, started looking into starting my own tax firm. And I discovered something that is called tax planning, right? And I started learning more about it, traveling the country, learning about it. And I basically started my firm, and not a traditional tax business, but really doing tax planning for business owners. And it's interesting. The reason you and I actually met is because originally when I started tax planning, and I was doing it for quite a few years, my niche were attorneys, not as much as anymore. As our tax firm grows, a lot of more people want tax planning, not just attorneys, right? But we have quite a few attorney clients and personal injury attorneys. And that's where I kind of found my sweet spot. And I'm grateful for working with attorneys because they put me through a lot. And if you can handle attorneys, you can handle any kind of business coming in through the door. So now everything else is like a piece of cake. Even people tell me, you work with attorneys, I feel sorry for you. I'm like, I don't, not anymore. But yes, so the way we started, the way I started this firm is that we started doing tax planning, right? Really using tax strategies, because the old way of doing things for people is doing tax preparation and working with their accountant and not really being proactive. I mean, you work with us. I've got my team always reaching out to you or to your team and kind of being proactive about using some of the things. That's really our background. It's helping business owners and attorneys, right? We've got a lot of attorneys that we help them reduce down their taxes with using proactive tax strategies. And as their business grows, we try to get as creative as possible.
You've written one or two books, haven't you, about tax planning?
We have a book, Thinking Outside the Tax Box, that is being currently sold on Amazon, but I also have my own ebook that is circulating online, and that is on S corporation tax strategies. Yeah.
Okay. Yeah. Okay. So what we want to do then is when we get through, we'll put it in the notes of how they can get that. Is it free or does it cost money?
The ebook costs money, but I do have another ebook that we can give away, some 7 tax strategies. I'd love to share that. Absolutely. We can put a link for that.
Okay, good. We'll do that at the end. So tax planning. So why should, well, I guess it's a pretty obvious question. Lawyers should be thinking about this, especially a lot of our members, just to be honest with you, make a lot of money. They just do, because PI business is very lucrative. I mean, if you're good, you're going to do really good, and you're going to make a lot of money, and as I learned the hard way, you're going to pay a lot of taxes. So what would you tell lawyers out there that are,
Yeah, I'm glad you brought this up. I think these are one of the things that I'll be speaking at your summit. And anybody that's listening to this, I think should attend the summit simply because I will be speaking. No, I'm kidding. But one of the things that I want to cover there is that a lot of times, like I said earlier, as the businesses grow, when I said that, I meant my clients' businesses grow. We try to get creative, right? One of the things we think about is income shifting, right? Is income shifting from a higher tax bracket to a lower tax bracket. And the only way to do this right now is the best way to do it right now is really thinking of, hey, different entity structures for yourselves. Right now, we are at such a great position after President Trump kind of enacted that, Tax Cuts and Jobs Act in 2018, and he brought down the corporate rate to 21%, right? Basically, we've started seeing a lot more C corporations rather than S corporations, right? And pre-TICJA, pre-Tax Cuts and Jobs Act, right? C corporations had a gradual tax rate, but professional service corporations such as attorneys always pay the highest tax bracket, regardless of like the income, right? But with TICJA, that's kind of evened out, and it's 21% for everyone. And now you've got a personal injury attorney making tons of money, for example, and he's probably paying tax at a 37% tax bracket, at his highest federal tax bracket, which is 37%. Of course, we know President Biden is looking to increase that to 39.6%. And, they want to increase a lot of other things, but, Build Back Better plan didn't pass. Joe Manchin kind of pulled the plug on that one. But other than that, right, at 21%. So things that we have to now consider is that, can we do that? Is our business profitable enough? Is our law firm profitable enough? Do I want to open up a second law firm, so to speak, that will, now be that in a different entity where I can have that going on, where I can have income be taxed at a 21% bracket rather than 37% bracket, right? And a pushback on that could be, well, C corporations are subject to double taxation, so are they not? If the C corp will pay taxes, but then I will also pull the money out as dividends and I'll pay tax on it again. That's true. That's why you want to plan strategically, right? I would never recommend to somebody to become a C corporation, which is a small business owner, and they need that business to live off, right? We're talking about when you already established your business good enough where you can break the business into two, or open up another law firm, or open up something else where it's going to be on that low bracket where you still have money coming into your main business, whether that be an LLC, a partnership with another a lawyer, or your S corporation, where you can live off, right? And we have another business where we can have that money. Now, there might be another pushback. There's accumulated earnings and profits tax of 20%. There's ways to go around everything legally, right? That's why we have our tax code. And one thing I think is important that I want to mention here, if you don't mind, it's not so much of a tax strategy, but I think it's people's mindsets of understanding what is really a tax code and how it works, right? And I had this epiphany a few years ago, even though being in tax planning for quite a few years, but kind of had this epiphany myself. The tax code is incentivized to help those that are in business for themselves to save money on taxes. Now, that's a simple sentence, but a deeper understanding of it, think about that, right? That is why we have so many real estate tax strategies in the tax code, because the tax code is incentivizing people or investors to build, develop real estate and give them bigger tax breaks, give them 1031 exchange, which allows you to exchange one real estate property for another and defer your taxable gain, right? To do those exchanges. Why? Because the government wants you to invest, right? The government wants you to develop. So tax code is incentivized. So when a lot of people say, I don't want to do anything that red flags, you're right. We don't want to do anything that red flags. And the reason there are red flags and why IRS comes after people, so to speak, is because people tend to abuse some of the power they were given, right? Quote unquote power, right? So because Congress made the tax code, not the IRS. IRS is an enforcer. The Congress's intention is for you, business owner, to invest in business, to hire people, because the more money you can save on taxes, the more you can expend. When you expend, you spend money, others earn it, they pay taxes. You expend, you hire people, you pay them salary, they pay taxes, right? There's payroll tax and all kinds of taxes. So the government is made the tax code to incentivize this. Just a simple example so everybody can relate to it. Think about the fact when we started having electric cars and Teslas, and all the companies start making electric cars, and the government gave an incentive via tax code to reduce your taxes or give you a credit if you have an electric car. Now, what is government doing? It's incentivizing you, right?
Absolutely.
The government is incentivizing you. So when you have a business, government is incentivizing you to find all the creative ways for you to save money on taxes. And all those creative ways are in our tax code. Now, what happens a lot is that one of the things I was having a lot of pushback with attorneys when I first started working is that there's a stereotype of accountants, right? Like accountants charge usually, a very minimal fee to prepare your taxes. And God forbid you start mentioning something, a little bit of a higher fee for tax planning with attorneys. They couldn't comprehend that because everybody's so used to accountants not being charging so much, right? But at the same time, we're being tax preparers. But now you've got to think about, hey, who can I work with that knows how the tax code is incentivized? So my wish for everybody that is listening to this podcast, get yourself a tax planner, a tax strategist, somebody who can look beyond the numbers for you and plan, because preparation is done at the end of the year, but the tax code is incentivized for us to use. Now we've got so many, like for example, President Trump, when he became president, we had special depreciation, bonus depreciation go up to 100%. I mean, you want to tell me that the economy was not spurred by the fact that business owners start buying all kinds of assets to be able to write it off? It's incentivized, right? At the end of the day, I don't want to say control us, but in a way they do, right? Not like in a bad way, but they want to control our actions to benefit the country and the economy through the tax code. So the tax code is incentivized for us to take advantage.
Tell us about that depreciation, that you can depreciate something. How would a lawyer use that?
It's a great question. So that's another thing that I'll be talking about at the summit. So attorneys, right? It's very hard for them to depreciate an asset because they don't really have these type machineries or equipments that they buy, right? They can buy a company car and depreciate that 100%, for example, right? If it's over 6,000 pounds, has to meet certain criteria. But really for attorneys, it's kind of hard to do that, right? But what attorneys can do is start thinking a little bit outside of the box, right? Now, we as service professionals, I'm a tax accountant, right? We're so busy and running our own business, which is our practice, right? Whether it's an accounting firm or attorney firm, right? And we're not thinking outside the box. And we should start thinking outside the box. And that should be part of our planning, is what assets can we invest in that can help us with depreciation? For example, with attorneys can invest in a lot of machinery, right? But can they start thinking about investing in real estate? How will that work for them? How can they turn their income from non-passive to passive? How to turn passive losses into deductible losses? Or the best one, which all attorneys can relate on this podcast and at your summit is a lot of attorneys buy their own office building in which they rent to themselves. A lot of them do, majority do, because I've been working with attorneys, and a lot of them, if they own real estate, it's their own building, right? Is that correct, Ken?
Yeah.
So one of the things that attorneys that do not want to invest in real estate, but they have their own property in which they rent their office space, there are strategies around that. There are depreciations on that, when you're kind of doing it to yourself only and you're 100% tenant. And there are strategies around that you can use as an attorney. And one of the best things that I've found when working with attorneys is, number one, self-rental strategies, right? Number two is recategorizing your law firms, if it's big enough, right? Where you can start shifting income to other entities, right? Then your other entities, the money that you accumulate, you can do so many things, right? You can take out loans to invest in real estate and so forth. But I'm kind of speaking in general terms. The reason I'm speaking in general terms is because this is good information for you to know, but not for you to kind of start doing for yourself. It's where you need to kind of strategize and plan with a tax planner, sit down with them and do that, which is what we do for our clients here. But yeah, that's kind of it. I hope that answers your question.
This episode is brought to you by PILMA Super Summit. June the 27th through the 29th, you can come and learn how to take your law firm to the next level in New Orleans at the fabulous Ritz-Carlton Hotel. Go to pilma.org/summit. Have you thought about this before, creating a management company to manage the law firm and push that out into another entity, but I don't know if that makes much sense or not.
So yes, I'm very careful when I recommend management companies, right? For example, because, and usually the management company would work well, if somebody has their hands in different businesses, right? Let's say, for example, you've got an attorney, he's running a personal injury attorney, but he's also partnered up with somebody to run a family law, but he's also partnered up with somebody or has his own other law practice that he's running, right? You obviously need a management company to manage all those attorneys, at least the administrative work from all those attorneys. Now, you can create a management company that is also a C corporation that will also charge a management fee and pay tax in a lower bracket, right? But you have to be very careful when you want to create a management company for your one business, right? Because then it looks cute, as I like to say it, for the IRS, right? Unless you have other companies that you manage, right? So that's another thing. Again, there's planning strategies involved around that, but I kind of approach the management company with caution. It really depends what and how.
So I'm just throwing this out here. This has not been planned. So if you did have 2 or 3 businesses and you created a management company and made it a C corporation, could you take the profits from the C corporation and go invest in real estate and still not, and not pay but the 21% the first time?
You got it. Yep. So that's the whole reason of having, different entities where you can shift some of the income legally, right? And then when you shift that income, now you've got income sitting there and we don't want to take it out. We want to do something with it. And we can now look into investing that money from that real estate. That money can come out as loans, legitimate loans that would have to be repaid back, right? But it's the money that is being taxed at a lower bracket compared to your 37% bracket. So why reinvest the money on which you pay the highest tax on? Does that make sense?
Makes sense to me. And, and I texted you today earlier. I know you don't want to talk about it, but that 100% depreciation, that can be used on, that's what we were talking about. So, I always thought that 179 deal was if you got a vehicle over 6,000 pounds, get the first 25, and then you got some accelerated depreciation, but you couldn't expense it off the whole first year.
So Section 179 is a great strategy, right? It also depends how you strategize. So I can talk about that a little bit. So here's the thing. Before TIGJA, Section 179 was better in some aspects than the special depreciation, because special depreciation was capped, right, at 50% or whatever that was. With Section 179, you could take that. And of course, that depends what the Section 179 also has limits, right? But usually Section 179 would be better than special depreciation. When President Trump enacted Tax Cuts and Jobs Act, he gave 100% special depreciation deduction, which in some aspects now became better than Section 179, especially when it became to deducting vehicles, because vehicles have that cap on how much you can deduct if it's under or over 6,000 pounds, whereas with special depreciation, there is no cap if it's over 6,000 pounds. Now, let's say business has a loss, and if you take a Section 179 deduction, you cannot, let's say an asset costs $50,000, you took a Section 179 deduction, and you already have a loss, that $50,000 Section 179 you will not be able to take that deduction in your current year taxes because it is limited to the net profit. So it'll be carried forward. In this case, you might want to strategize, but you know what? In this case, I would take a special depreciation. So in the years where special depreciation was capped, in situations like that, it would make sense, right? Again, it kind of comes down to planning, right? Again, it kind of comes down to planning and having conversations with your tax advisor about this.
So, I guess the big deal is, I've never heard nobody really talk about what the effect of the Trump years in Congress when Republicans were in charge, that tax law that they passed, cutting the taxes, but it created not just cutting rates, but evidently like this 100% depreciation. Were there anything else going on that could help us that, the hell I didn't even know about?
Well, one of the things that they did in TIGJA, right, they didn't do anything that would help, so to speak, attorneys, but they didn't do anything that would not help them either. Meaning, say it wasn't bad because the tax bracket kind of went down a little bit, but it wasn't anything good for them either, right? Because what happened when they passed the corporate tax rate at 21%? They said, well, we did the 21%. What about pass-through entities such as S corporations, partnerships, single-member LLCs, right? And they said, we're going to do what's called a qualified business income deduction. That means you get a 20% haircut on the smaller of your taxable income or your business income. Okay, that's great. So that means if I earned $100,000 on my business, I get a $20,000 deduction, right? Which is awesome. I don't even have to do anything, but I just want to I guess get off the topic for a second. You'll be surprised how many accountants miss that check the box deduction that the IRS gives the 20%. But how it is detrimental to attorneys, just like accountants, doctors, and certain consultants are considered specified service trade or business. That means if attorney and myself as an accountant, and we make over, I don't remember the exact threshold, let's just use 400,000 and change. If we make over $400,000 and change in our taxable income, forget it. We lose the QBI. We don't get that 20%. So that's what the law did, so to speak, not to help people like us if we're over the $400,000 threshold. But overall, the Tax Cuts and Jobs Act was very beneficial to a lot of people, right? We had a lower tax bracket, and at the same time, those attorneys that were under that threshold, and when I said 400,000 and change, that is for married individuals, they got their 20% deduction. Now, here's another kicker. I just want to add to this. When we have a separate entity that is a C corporation, and if we're kicking a lot of income there, we can reduce our taxable income a little under over $400,000 and qualify for QBI deduction, right? Again, like you can create so many opportunities for yourself with proper planning if you do that.
So you said you wrote a book about S corporations?
Yeah, S corporation tax strategies, correct.
Yeah. Well, I know, here's the deal, and this is why I think that's why I wanted you on here, and why I got you speaking at our summit. For years and years, I paid a CPA. I get all my stuff up, give it to them at the end of the year, and they sit there and they just call me in one day and say, here's what you got, here's the bill, here's what you owe me, and here's what you owe IRS. And I said, isn't there some way we can figure out how to save some taxes? No, man, everything, ever since Reagan, everything's, pretty much black and white, But I just got so tired of it. And that's when I went searching and found you. I mean, listen, if I could save 30,000, if I could save 100,000, I mean, that's money. I mean, that's real money that you can put into something and earn more money, right? I mean,
right, 100%.
I just and listen, we know our country spends it so wisely. I don't mind paying my fair share, but I feel like
that's the key word right there, though, right? You just said it.
Yeah, what's fair?
I'll pay the fair share, but like nothing more than I have to. And again, our tax code is incentivized for us to do that. For example, right? Let's take an S corporation, for example. I remember when you and I started working together, you didn't have an S corp, and we put you in an S corp and figured out your salary, and we did the whole thing for you. And you kind of, it saved a lot of money there. And we did give you some other strategies. And is what we did for you, is it illegal? No, right? The tax code incentivized us, right? President Biden has a business. He sells books. They converted his LLC into S corp, and he took out like $800,000 salary. And I believe the article said he saved close to $500,000 in Social Security and Medicare taxes, or something of that sort. And they quoted the IRS code. I have it in one of my video trainings on reasonable compensation. They quoted what Biden's did is in accordance with this, this, and that, which almost are exact same words from that IRS code. I kind of put it 2 and 2 together when I was doing certain training video. I don't remember, but why it was incentivized, right? It's nobody's like going to jail for it. I like to bring an example of Amazon. I think they say Amazon pays zero tax. Well, Jeff Bezos is not in jail, so that means he's not doing something illegal.
Yeah.
Right?
Yep.
There you go. So we just have to know how to work our tax code. And that's it. With President Biden, a lot of people were afraid, new president, bigger tax. Yes, true. We are probably going to have bigger tax. But can we now look at the tax code from what he's putting in there? Now, he's big on green energy. So then we need to focus or structure our life, or our tax life, I should say, around that. He gives out, so there's going to be a lot of credits for example, solar panels on your home, on your rental properties, on your buildings. You can like double dip, so to speak, with deductions or whatever that is, the credits, or it would seem like a double dip, but you would get a lot of incentives, right? So these are the things to look for. It's the tax code is incentivized regardless of who the president is. We just have to work with what's in the tax code.
Good deal, man. So I'm looking forward to hearing you're going to be giving out specific tax strategies for lawyers at the summit in the end of June?
Yeah, we're going to go into more detail. I think I'm going to bring in kind of top 3 that I think would really benefit. And we're going to go into details. And then we're definitely going to put some good stuff there.
Well, listen, I appreciate you being on today. And people want to get up with you. How can they get up with you, Boris?
I think the best way for them is, first of all, we'll give them a book download. I'll send you the link later today. And also we'll probably include another link there, which is taxplanningcall.com. That's taxplanningcall.com. It'll take you directly to speak to us. But you can also learn more about us on that site, taxplanningcall.com. And if they just look me up by my name, you guys can see all the tax planning we do for our clients. And I'd love to help out your attorneys. Absolutely.
You've helped me, and I appreciate it a bunch.
Yeah.
I really do.
Great.
All right. Until next time, this is Ken Hardison, dedicated to your success.
You have been listening to the Grow Your Law Firm podcast, the podcast that leads lawyers to more growth, profit, and freedom. Go to growyourlawfirm.com to find more ways to market and manage your law firm. Please leave us a rating and review wherever you listen to your podcasts.